Hello, welcome to Wednesday, March 29, 2023, pre-market observation. All right, let's jump right into it. First up, TLT. I have been adding to my TLT position since last week, and I will continue to add if I see anything here and below. It's a no-brainer. Just has a little patience. It will pay off handsomely down the road. No doubt about that. Okay, so um, I have a couple of cover calls last week, which I'm pretty sure will expire this Friday, worthless, as well as some puts. I sold um, short puts, naked, from 104.5 all the way down to 102. I have 5 puts there, and I will let them be. I don't mind adding a few more 100 shares between 104.5 all the way down to 102 if the opportunity presents itself, and most likely it will. So for now, where do I think TOT can go? It came down yesterday right to the 20 MA and bounce. Can it still go down to 103.55-ish? The 100-day moving average is possible. Do I see a gap fill? Unlikely, but that's why I wrote my puts down there, right? Uh, I will gladly add to that position down there. For now, that's it for TOT. The banks are stabilizing. I would love to add to Bank America on any pullback, for sure, right? I think running to the 20 MA is a no-brainer, but my target zone to exit is of course up here in a 32, so I'm looking at 10% plus potential return in the next few weeks. Yes, I would like to add to Bank of America. Which other one would I like to add? Goldman Sachs, same thing here. I would add on any kind of pullback. I think Goldman Sachs would trade. I've been selling puts as well. I did put spread in a 305 and below, but I do think once the financial stabilize, I think there are strength and higher potential for both Goldman Sachs and Bank of America, my two favorite. If you play the KRE, I think the risk reward is going long here as well. If you wish, I don't think that's a bad play at all. To go into the KRE in this range, sure. If you want to sell puts and put spread, maybe do it 40 and below. But I think the risk reward here is going long on the KRE at this point. Enough time has passed, and I think there's more reassurance that we're not going to have any more contagion in the regional banks. All right, let's move on to big tech. There had been, no doubt, profit taking in big tech. I was looking at Meta yesterday. Not yet. I would like to sell puts below the 20, where the gap fill is. Okay, to me, that would be the spot to buy back some of the Meta that I trim. But until it get to that point, I'm not buying more. Would I sell put at 180? Yes. If there's premium on further pullback, I would. But look like we're having a little bounce here. You can see in pre-market, Meta is up to 202, so that's okay. No need to chase. No need to chase. Same thing with, I'm sure, Google. You're gonna see a bounce this morning. Down here, if you want to sell puts, do 97, 96, or do a put spread like 95 down to 90. Probably not a whole lot of premium there, but I think a decent put spread would be, say, 97, 95. Very tight, okay? But that's about as good of a spot to sell puts if you don't want to add share. But for me, would I add share down here? Maybe. Maybe. I got enough exposure to Google. I don't need to add any more. Microsoft, I have been saying for the past week. It's time to go. I don't see a whole lot of upside. Uh, if you have it, I would say trim some in the 279 and above, because it's just not, it doesn't look good. Okay, it's been there. It's been there for a while. Can it go higher? To me, the risk reward on Microsoft is lower. Keep in mind, quarter end in the next 2 days. All right, by Friday. So earning season is coming up. So be very careful. Tesla, I was looking to sell some put spread yesterday, but it didn't work. I like Tesla here on the pullback. Where would I sell my put spread? 180, 170 down here. Using the 50 MA is my protection. Okay, if you want to buy the share outright, maybe at the 50 MA. Okay, last time it came down, it bounced. Look, it came down to the 50 MA, it bounced. So if you like to gamble on Tesla, if it come down to the 50 MA, have a buy order at say 183-ish. Yeah, if it come down there, just be patient. No need to chase. Earning season is here. Let's take a look at energy. USO, I have two put spread that I closed one. The other one likely will expire worthless, which is fine. For me, if you have energy right now, it is a trim, a sell for sure. And if USO get anywhere near the 50 MA, it's definitely a sell, right? Time to get out. I think the range of USO is going to be a lot lower now. It used to be, it used to be okay to hold it to 70, 71, but those days might be behind us. The new range might be 57 to 66 area. So for me, between here and 66, it is a trim and get out. Oxy, I have been bullish trading Oxy for a while. Warren Buffett has come in each and every time this year so far when it's 58 and below, and it bounced. And if you have it, it's time to go. Okay, it's time to go. Look. Can it go higher? How high can it go? 64, right? So if you still have some, I would say trim here towards 64. I don't see it above. Okay, not when energy is below 70. What would be the reason for energy to be higher? We have recession fear looming. We all know if we are heading into a recession, whether it is a soft landing, a mild recession, energy will be lower. That's just the way it is. Speaking of energy, I talk about LNG. If you have LNG, it's time to go as well, right? If you buy LNG in the 145 and below range, congratulations, but it's time to go. You have maybe $2 or $3 left on the upside, right? For sure, it is a sell at the 100-day moving average, right? Don't be greedy. Do not be greedy on LNG. CTRA, yeah. It's time to go in the 24. If you have it, yeah, time to go. Let's take a look at some of my favorite trade. Of course, UNH. Further weakness, I will sell puts again. Where? 460. Do a put spread again. 460, 440. That will be the area. I like UNH here more than ELV. If I had to pick which one of the two that I like, I would say UNH at this point is more attractive to go long or to sell put or put spread. I did sell more put spread on ELV yesterday on the dump before the bounce. When it was down here below 460, I sold a put and it went even further. I have 5 put spread right now on ELV, way below. The highest put spread is 452 on the top end down to 440, but most of my put spread is in the 435, 440 range. So I think I have pretty decent protection with 2 days left to expire. But if I were to sell any, it would be, of course, UNH. LabCorp, I like it here. Okay, on pullback, I will add. I like it. Not a lot, I'm buying small. But it is at the area of support that I like. And I will, it's hard to sell put or put spread here because you only have monthly puts. No, so no, I'll just buy outright the share. Same thing with DGX. Now DGX have a bigger bounce, okay? So definitely a no touch here. It's at resistance. It's gonna struggle here. But for me, anything below 134 to 132 is a buy on DGX. One of the sector that I bought and trimmed yesterday was Martin Marietta. I like it. I sold twice yesterday as high as what did I sold it at? I sold it at 342 was one of the trim. Where would I like to sell the rest? 351. I will put an order up there in case there's a pop. Very volatile stock, okay? This stock can move. It's trade on light volume and it can move quickly. But to me, I would definitely sell maybe half of what I have left up there, 351-ish. And then if it get anywhere near 360, I am all out up there. Lockheed Martin, I would like to sell puts on dips to the 50 MA. I would add share outright at the 50 MA and sell 460, 440 put spread down here. Yeah, I like Lockheed Martin. I don't care what people say about us not spending more money on defense. It's a good area to put money. Target, I like Target here. Would I add share down to 156? I would sell puts 150 and below. Yeah, I like Target here. I like Target a little bit more than Walmart. I did like Walmart down here, but up here it is a trim, right? If you still have Walmart, trim some. If you get anywhere near 146 and above, 147, it's a sell. Outright sell everything, okay? If you have Walmart, if you want to play on the dark side, that would be the area when you might do a short put spread or something. Because look, ignore this crazy arrow day where some stock went crazy, but it has been an area to sell between 46.8 and 147 up there, okay? So keep your eyes on that. Speaking of big box, how about Costco? Costco, to me, the risk reward is not be in Costco right now. Would I go and buy share outright? Or I've been doing a lot of put spread on Costco. It's easier to do it that way. If I see a pullback to the 20 MA, then I might sell put spread 475, 450, something like that down here, using the 472-ish. Between 470 and 472 has been the area of support that it bounced multiple times in the last 3 months. So yeah, if I were to see Costco down here, then I would sell put spread probably 470, 450 put spread. It's been good. It's been very good to me. FV, to me, raise your stop. I would not want to be greedy here. Raise your stop. If it keeps drifting higher, I have no position. I have not have any FV for a long time. The area to buy FV was here. I got out on this bounce and then nothing for now. If it come down to the 100 MA, then yeah, I would probably buy some share there and then sell put spread at the 150 range, using the 50 MA as my protection down here. For sure, it's a no-brainer to buy at the 200-day moving average, okay? No-brainer. If it get below 150 into 149 range, yeah, no need to chase. Amgen. You know, I've been talking about Amgen down here. Good area to go long. If you did, congratulations. But now you have to pay attention to the 50 MA. I would say trim into that, okay? Trim. You get a decent bounce, so, but resistance is coming. Look, the last time it touched the 50, big knockdown, right? I don't think you're gonna see the similar kind of knockdown this time, but still, that's gonna be an area of resistance. So trim some. Pfizer, I like Pfizer. I have not added to Pfizer. At least it's stabilized. It needs to show me that it can get over and hold the trend for me to add more. I would like to add more, but it need to show me a little bit more strength. And then there's a potential 5% move to the 42 to trim some. And then, of course, ideally, I like to get out in the 45, 46 range up there. Okay, to me right now, that could be the area to exit. Eli Lilly, I still have some. Where am I looking to get out? 347. Okay, I have an order up there between 347 and 348. I have a alert set up right there. So if the alert go off, I will be, well, I already have my order in at 348. So if that alert set off, then I know it's very close, and I might, you know, depend on what's going on, I might adjust my limit price and then sell it outright. But to me, that's the spot to sell. Look, the last time we got there, pretty ugly rejection, right? So I'm not gonna watch it get back from, say, 348, 349 range all the way down to 310. That was an ugly 10% plus down move, okay? So don't make the mistake. Let's take a look at defensive play, which it's time to go on Pepsi. If you have Pepsi, it's time to go. I'm all out on Pepsi. I got out last week up here, okay? So twice now, you got the ugly rejection up here, so it's time to go, okay? 179, 180, it's go time. The risk reward is not to stay long here. The time to go long was here in the low 170, below 170. That was a no-brainer. But now it's time to go. I still have some exposure to Coke. I have trim, and it is in that zone where between here and 65, yeah, I'll be all out for sure. If I see anything above 64, I will put a sell order to sell everything on Coke. McDonald's, it's time to go, right? If you have McDonald's, raise your stop. And looking to exit between 270 here. To me, anything near 280, it's a go, right? The risk reward is not to be long here. Earnings season's coming up. It's time to go on McDonald's. Between here and 280, time to go. What else? What other sector? Now I talk about transport, right? I like transport. Last week, I thought it was an area that's worth taking a risk. Got a nice little bounce here, but pay attention to 20 MA. So if you bought CSX last week, you should trim into, of course, the 20 MA for now, okay? Transport is worth a trade. Same thing with JBXT. I talked about last week. It's time to pay attention. If you buy into it, look for the 20 MA to trim, and of course, trimming into the moving average above you, okay? Don't be greedy. If we go into a mild recession or any kind of recession, transport will stay weak, but it's worth a trade. Speaking of transport, if you have UPS, I would say it's time to go. I have been saying that for the past week or longer. If you run into resistant area, right? Now, the risk reward is not to be in UPS. Same thing with FedEx. No, it gap up, been sideways since. To me, if it filled the gap, I would look to sell puts, say 200, 190 down here if they're juice, but there's no reason whatsoever to be long FedEx or UPS right now. Not for me. The area to go long was CSX and JBXT last week. Before I go, let's take a look at, let's see what other sectors have I not looked at. Let me think. Medical device. ISRG. It was time to go. I have no position here. The time to buy was, of course, the 200-day moving average, right? If you did that, good on you. But it's time to go. At the minimum, on any kind of pop above the 100-day moving average, I would use that as your stop, or at the worst, use the low of day yesterday as your stop, because if that give, you can buy it back at the 50 or the 20, right? To me, that's the area that I would buy down here, or sell put spread, say 230, 210. If there's a pullback to the 50, then there might be juice below 220, you know. But no, to me right now, it's a no touch. EW going sideways. I trim a little bit between 81 and 82 last week. I've been trading EW. I have my core position there, which I like for long term, but I've been selling puts as well. To me, if you want to sell puts, do 78. Okay, I would sell put at 78. I would add share at 70 below 80. For now, you know, it's worth staying long into earning. And if you get a pop anywhere near the 200-day moving average, 84-ish, then I go. Okay, that's, you know, that's the area of the gap fill. See, the last time it got there, look, the gap fill, rejection, ugly. Okay, so the last time it got up there, reject all the way down to low 70. That was ugly. Okay, so I'm not gonna make the same mistake. I did trim here. I wish I sell more, but I didn't. Anyhow, I add more, and then of course I've been trading. So for me, anywhere near 84 is a trim. And I definitely will raise my stop much higher this time so that I don't suffer the 10% down move like I did last quarter. Okay, so there will be a run. Earnings season's coming up, so it'll be a lot of fun. Abbott, I like it here. I like it here. Out of all the medical device, I think Abbott had potentially the biggest move. You can look at an 8% move here, okay? If it can break the 20, it can be a very quick run of Abbott. I'd definitely like to add here in the below 98 if I can, because I think if there's a breakout move, we can see a really nice move. See the last time, look, the last time it break the 20-day moving average, look, it's a nice run, right? And once it failed, and then the check back, that didn't work, it failed. Wow, ugly move, right? So to me, I might add a little bit and add more if it can break the 20, and then you have a 5%, 7% move way up there. I like it. I like it a lot. Out of all the medical device, I think that's the best one. Medtronic is okay. I have exposure here as well. Would I add to it? Yeah. down here. Okay, I will do the same thing. I will sell puts below 77, but the chart look much better for Abbott for sure. Now that I show you all the medical device play that I like, that's the one. Abbott is the one to add over EW and Medtronic. And that's it. Good luck. See you Sunday.